Hello, hello, hello. Good afternoon
Hello.
from Canada, Ontario, Canada. Um, can you guys hear me?
Yes, yes, please.
Yeah, we can hear you.
And you can type in the chat.
Mm,
Mhm. Okay, you can hear me. That's good. That's good. Okay, welcome to our first masterclass here at Chart Nation. Um, just having some unforeseen tech issues this afternoon. So bear with me for a minute. Okay. Thank you. Thank you. Okay. We're just going to give it like maybe like 2 minutes and then get started so everyone can join in because we're having some tech issues right now. So good evening on YouTube. We're also streaming live on YouTube as well. So YouTube gang, good evening or good afternoon. Okay, we're going to get started shortly, so stay tuned. Okay, so let's get started. Let's get started. So first of all, I'd like to know where everyone is joining in from, because I know this particular meeting was shared to multiple people across the world. So, can you type in the chat where you're joining in from? Type in the chat where you're joining in from. Okay, Nigeria, Canada, Ghana, Ethiopia. Okay, Morocco. Oh, wow, that's impressive. Kenya. Okay. Wow, that's good. That's good. By the way, the meeting is recorded. So in the chat, I'm seeing here people are joining in from Nigeria, Kenya, Morocco, Ethiopia. That's impressive. Lagos, Nigeria. That's good. Ghana. Okay. Canada. That's good. That's good. Okay, keep typing in the chat where you're joining in from. This is great. Okay, Ghana. Okay. South Africa. That's cool. I love you guys' movies in South Africa. You guys have amazing movies, I have to say. Okay. That's great. That's great. I'm so glad to see all of you, or not see, but I'm so glad that you guys are able to see me. I'm so glad that you're taking full advantage of this opportunity because look, it's 2024. The inflation in every country is crazy right now. So we need to be smart about our sources of income, okay? We need to be proactive. We need to be smart about our sources of income, and we need to do this day trading thing the right way. Okay, so that's the inspiration behind putting together this masterclass. And just so you know, this is not going to be the only masterclass. This is the first one. This is the first one, but we're going to have one every month of this year until further notice. We're going to have one every month this year. So take full advantage of it because I'm going to be putting in a lot of my knowledge that I have gathered from multiple sources for a very, very long time now. So please take full advantage of this. Yes, so welcome everyone. Type in the chat where you're joining in from. I am so happy to see all of you here. And please, as you join in, just mute your mics if you don't mind, so it doesn't disrupt the audio. Yeah, that's good. That's good. Okay, so I'm just gonna start now, okay? So like I said, this is our first masterclass. This is the first free day trading masterclass hosted by Chart Nation. Chart Nation is a day trading education platform that was founded by yours truly, me, Eva. The purpose of the inspiration behind the creation of Chart Nation is because when I decided to go into the day trading space, that was in 2020. I was looking for an extra source of income. I was just a student, right? At the time, I was an international student in Canada. I was paying a lot of money in tuitions. I could barely survive on a day-to-day basis. So I needed another source of income. And then I did some research and I found day trading. And 4 years down, I would tell you that I have had a very, very rocky journey. Okay. So the reason I created Chart Nation is so that I can ease or help relieve some of the stress that comes with getting into this field in the aspect of getting proper education. Because in this field, if you don't have proper education, your journey is going to be so rough and so painful that you would wish that you did not come across this field. Let me just tell you, because that's how my journey started. My journey started very rough. I started with wrong information. So I learned the wrong information, tried to execute it. I blew countless amounts of money that I did not even have, right? I was using my credit card to fund my accounts. And I kept blowing the money. At some point, I cried. I literally bawled my eyes out crying because it was just so painful. I was a student. I could not even afford the money I was using to fund the account. But then the truth is, I was going about it the wrong way, right? And I guess that's what most people do. You want to go into day trading, and the first thing you do is fund an account and trade, but you don't know anything about it. For most of us, we have never, we've never actually been educated about, anything like the stock market or anything of that sort. So we really don't know what it's all about, right? But still, we think it's best to just fund an account, get in, and trade, and that's bad, right? So that's what usually that's what usually affects traders when it comes to the kind of journey that they have. Someone said my YouTube isn't streaming. Really? Let me just check that real quick. Okay, so just so you know, the actual link that was sent for some reason on YouTube, I'm not able to access the link to stream on YouTube. So if you have someone that's trying to get access through YouTube, just let them know to search for Chart Nation and check for Chart Nation Live. You'd see us live, but it's streaming on a different link for some reason. Okay, sorry about that. Okay, yeah, so I'm just trying to explain to you why this platform was created. Because the truth is, the information about day trading, the information about, how to analyze charts, it's literally all over the internet, right? It's all over YouTube, it's all over Google, but still, for some reason, traders are not profitable. Isn't that weird? You would think that because of how much the information is just all over the place, you know, people will be profitable, right? But the issue is not even that. Again, the information about day trading and how to analyze charts is literally all over the place. I can give you like a ton of free material right now, but still you will find it hard to turn that information into money, right? And the main reason why people are not profitable is because they don't have the proper knowledge, because it's not just about analyzing charts, and hence why Chart Nation was created. So we're going to be going through everything that's needed over the next few months. But today we're going to be laying the foundation knowledge that's required for you to come in with the clear understanding, clear mindset, clear mind in order to succeed in this field, right? So I'm just gonna introduce myself. I guess a lot of people don't know me like that. So I'm just gonna introduce myself. My name is Eva. I am Nigerian. I moved to Canada when I was 18 for uni, and I've been in Canada since. I studied here for 4 years, and then, I'm married now. I have a child. I'm a mom, and I also I work in a bank as well. I work very hard every single day to achieve my dreams and fulfill my destiny that God has put me on this earth to fulfill. I'm a strong believer in God and Jesus Christ. And I've been day trading now for 4 years. And like I said, my journey has been quite rocky. So I'm going to be sharing with you the things that you should do and the things that you should not do, so you can be successful and so your journey would not be painful like my journey, right? So before we get started, does anyone have any questions? You can put in the chat if you have any questions. I'll quickly answer them before we start. So I can share my screen. Okay. Okay, so share this with anyone you think could learn from it, and it could help them as well. So yeah, so we're going to be having one class each month, okay? We're going to be having one class each month, and it's going to be like from basic to advanced. That's what we're going to do. So now I'm just going to share my screen. Okay, I'm just going to share my screen now. Okay, let me know if you can see my screen, please. Let me know if you can see my screen. Okay, that's good. Okay. Okay, that's good. So you guys can see my screen. Okay, so day trading masterclass with Eva. I'm going to be looking over to the other side because that's where my slide is. So if you see me looking this way, I'm not looking away from you. Okay. So our agenda for today is we're going to go through a basic introduction of what exactly day trading is. Then we're going to look at the charts. We're going to look at the charts to see how we actually decipher what the chart is showing. Then we'll look at understanding risk management. Then we're going to have a quick Q&A session. So the goal for today is for everyone to take something home. For everyone to take something home. That's our goal for today. So first of all, what exactly is day trading? I'm sure everyone has heard of the stock market. I think the stock market gained more popularity when COVID happened because there was a crash and then an instant recovery. Please remember to mute your mic when you join in, please, and thank you. Yeah, so what exactly is day trading, right? So day trading means buying and selling securities within the same day. And money is made from short-term changes in price. So day trading is not investing. I keep saying this. I actually made a video on my Instagram the other day. Day trading is not investing. When you're investing into something, you're literally buying it. You're literally buying it, right? But then day trading means that, you're expecting, let's say I'm going to be trading gold, for example. So if I'm trading gold, I'm expecting the price of gold to either increase or decrease. So in that small fluctuation in the price of gold, I am expecting to make any amount of money I want to make, right? So let's say, because you can literally trade anything. You can trade oil, you can trade currencies, you can trade indexes, you can even trade stocks as well, or you can day trade stocks, you can day trade anything, even cocoa, right? People are making a lot of money from day trading. So the concept is this: you're expecting that the price of this thing is going to fluctuate, right? That's what we're expecting, that it's going to change from here to here. So within that short change, we can literally make any amount of money that we choose to make, depending on the risk that we use and the reward that we're hoping to gain, right? So I hope that understanding is clear. Okay, so moving on. Let's look at types of traders. So whenever you're day trading, you can either be a scalper, you can be doing intraday trading, and then you can do swing. So scalping means that you're holding your positions for a few minutes, right? I'm going through the basic stuff about day trading just because there's a lot of people on this call that don't know about it at all. I know that my Instagram family, I know you guys are already on it, but let's go through the basics. So scalping means that you're holding positions for just a few minutes. So you're expecting that the price of gold would change from $1 to $2 in the next 5 to 10 minutes. So you get in, you buy gold, and then when the price of gold increases, you close your position. So you make your money in that short frame of time. With scalping, you use the 1 minute to 30-minute time frame to trade. Now, the next type would be intraday trading. So intraday, it means that you're holding your positions for hours, right? However, the word intraday means it's within the same day, right? So you're holding your position for a few hours. So you get into the market right now, and then you get out maybe in a few hours before the market closes for the day. And usually when you're intraday trading, you are using the 1 hour to 4 hour time frames to trade, right? And then we have the swing position. So with swinging, you're holding a position just for like a few days. And positions are held for a few days, and you use the daily time frame to the monthly time frames to trade. So with swinging, it's not the same as investing. I'll just say that again. It's not the same thing as investing. With swing positions, you usually do this maybe if you're expecting a huge move on currencies or whatever it is, and you're just holding your position maybe from Monday to Wednesday. You get in on Monday, and then on Wednesday you're out of the trade and you take out your money, right? So that's just the types of day traders that we have. So scalping a few minutes, intraday a few hours, and then swing a few days. So now, what is Forex? it's so interesting that we're having this masterclass right now because there's a lot of stuff going on in the Forex space. There's a lot of stuff in a lot of countries going on in the Forex space. And I feel like there's just so much negativity, quote unquote, around the word Forex. Because if you're Nigerian, you've probably gotten scammed because you've probably gotten scammed based on some sort of Forex stuff or anything that has to do with like crypto. You see that the government in Nigeria is trying to like ban stuff. And then very recently in the US, they are no longer allowing US people to trade CFDs, or there's a lot of regulation now and stuff like that. So what exactly is Forex? Forex means foreign exchange. It is a global market where currencies are traded. So the same way we have stocks. Stocks basically means it means companies, right? Stocks is companies that you're trading or companies that you're investing, like Apple, Tesla, and the likes. So Forex means foreign exchange. So in this instance, we're talking about currencies. So if we're going to be trading currencies, we'll be trading them against each other. So for example, US dollar to the Canadian dollar, right? So US dollar to the Canadian dollar, GBP, JPY, so that's Great British Pound versus the Japanese yen, and so on. So that is what Forex is. And trading Forex means that you're speculating in the, or you're anticipating changes in the prices of these currencies, basically. We're going to go into it, but I would just like to mention that you keep an open mind during this meeting, okay? Because the media can really, really distract and derail people's minds. It has an interesting way of doing that. So please do not miss out on this opportunity of day trading. Believe me, I am a testament to that. Okay, so now let's look at this. What exactly do we trade, right? So what exactly do we trade? By the way, for the guys trying to stream on get on YouTube, for some reason I'm not able to access the initial link that was created. So if you go to the Chart Nation page, you should be able to see that Chart Nation is live. So that's the one you should access, right? So tell your people to get in. Okay, so what exactly do we trade? So we trade commodities. So commodities like gold, silver, natural gas, crude oil. So you literally trade anything. You can trade cocoa. The list is long. So this is the example on the left-hand side here. Next, we trade indexes or indices. So this is the Dow Jones average, industrial average, the NASDAQ, and the S&P 500, which is Standard & Poor's 500. So this Dow Jones average, NASDAQ, S&P 500, these are averages of a group of stocks, right? Averages of a group of stocks, and indices, that's my baby right there, indices. Then we have currency pairs. We have GBP, JPY, we have USD CAD, we have, these are just like the abbreviations, but what this means is the US dollar versus the Canadian dollar. Then we have the Great British Pound versus the US dollar, Euro USD, so Euro versus the dollar, and so on. So this is just a short list of what we trade. There's a lot of currency pairs, there's a lot of indexes, there's a lot of commodities for you to trade. You do not need all of them, you just need a handful to make you your day trading bag. Okay. So moving on. Now, why should you start trading? That's the main question here. Why should you start trading? First of all, day trading is recession proof, right? So if there's a recession going on, for example, when COVID hits, I feel like COVID was like the wake-up call for a lot of people when it comes to creating a business, understanding that your 9 to 5, is not should not be your final stop, right? So you need to diversify your sources of income. So recession proof, meaning that regardless of what is happening in the world, regardless of whether or not real estate is going down, stock market is going down, if you are day trading, you are just anticipating fluctuations in the price. So that means you can buy or sell. So it doesn't matter whether the whole market is crumbling. If you're able to spot an opportunity, you get in and get out, right? So it's recession proof. I guess for most of the investments that we have, for example, I guess the most common ones would be real estate, stock market, and cryptocurrency. Those ones are investments. You're anticipating that these items would increase, right? So my house that I purchased 2 years ago, I was anticipating that the price of that house would increase before I'm able to sell it. But that's not always the case, right? Because a lot of things happen in an economy that makes things fluctuate and stuff like that. But when it comes to day trading, whether it's going up or going down, if you're able to spot an opportunity, which you should be able to do, you can get in, get your money, and get out, right? Inflation proof. Inflation is just everywhere right now. Our income is no longer equating to our expenses. And if you ask your 9-to-5 or your employer to raise your salary, they will most likely say no, right? Because they also have expenses to take care of and all of that. However, in day trading, it doesn't matter. The money that you're making is all up to you, your knowledge, and the market. So once the market is open, there is always an opportunity for you to get in, take your money, and get out. So expenses versus wages, like I just said, like it's not equating anymore. The salary is not increasing, but expenses are increasing, right? Even when it comes to businesses, maybe you sell some products, you sell clothes, you sell shoes, you still need to raise your prices, and then your customers have to be able to afford those prices, things like that. All of that is not in day trading, bro. It's not in here. So that's why I love day trading. So expenses versus wages, and then to fuel your passion. Eventually, when you get into trading, I would advise that you stick to it. If you are already a trader, I would advise that you stick to it as much as possible, because the more time you spend in this field, the more you realize a lot of things, the more you fine-tune your method of trading, the more it becomes easier, and the more you make more money, right? So whatever your actual passion is, because I feel like these days everyone is like, trying to chase one career or another, and that's completely fine. But it's almost like a lot of people's passions are now underneath their career, because it's understandable, you need a good source of income, right? But then if you're a day trader and you actually stick to it, you find the strategy that works best with your understanding, you're able to fuel your passion, because then there is no cap on the amount of money you can make from the markets. So that's why you should trade. So let's move on to what day trading is. So trading is 10% analysis, 20% account management, and 70% psychology. So let me explain what this means. With trading, there's multiple layers to it, right? We have the layer where you have to actually understand what the market is doing. So, which is what we're going to go into shortly. So, but you need to understand like what exactly it is you're looking at with all the lines, stuff moving up, moving down, blah, blah, blah. So people think that's the hard part, but that's not hard. Let me tell you, if you just start learning and then you keep learning, eventually it will just be in your head, right? Because, for example, when I started, I don't understand anything. But right now, it will take me less than 5 minutes to find a trade every single morning. Less than 5 minutes is even too much, I'll tell you. In 1 minute, I have found an opportunity. I set my alerts and I wait for my opportunity to come to me, right? So that's why I say the analysis aspect is just 10%. Then we have the layer of account management. So this is where risk management comes into play, trade management comes into play, performance, part of your trading performance, because I am a day trading performance coach. So part of your trading performance falls under this account management aspect. So whether or not you're going to be over leveraging, which a lot of people try to do, I don't know why, but you try to over leverage, you try to oversize on your positions or on an opportunity, you just up your risk for some odd reason. This is where that's where it falls under account management. It's a very important aspect of trading, right? Then we have the trading psychology. Look, you know what I always tell people that I teach? Trading is all about psychology. Your trading has absolutely nothing to do with the markets. You can quote me on this. It has nothing to do with the markets because at the end of the day, the market is going to do whatever it feels like doing. Now, the question is, are you going to be stable enough to handle what the market is doing? Right? I mean, it's easy when the market is just giving you back-to-back opportunities. Like since the beginning of this year, my favorite pairs, which is indices, US 30, S&P, and the rest, they've been in a strong rally. So I've had opportunities all over the place. However, there are times when the market just decides to just like do some rubbish. And whenever that happens, you need to be able to handle it psychologically, meaning you need to stay stable in your mind to understand that your opportunity will come back eventually, right? So this right here, the psychology aspect of trading takes the whole cake. So whenever you hit a loss, whenever you're in a losing streak, whenever the market is not giving opportunities, you need to be able to keep your mind stable. So psychology is 70% of it. So moving on, the mindset of a successful trader. So when you're coming into trading, you have to come in with the right mindset. If not, if not, you're just going to play yourself. I will tell you this because I played my own self. So don't do what I did, okay? Coming into trading, you have to have the right mindset. So the mindset of a successful trader, you have to be disciplined. You have to be consistent. You have to be resilient, and you have to be tenacious. Let's break these terms down. Discipline is number one. Discipline in trading. So if you're in your learning phase, when you're trying to like understand what it is, it can be confusing, right? It may not make a lot of sense to you, but you need to be disciplined enough to understand that you're on a journey. So even if you're not understanding it now, you just have to stay. You have to remain with it. I hope that makes sense. And then eventually, when you move on with your journey, you still have to be disciplined to be able to do what you said you're going to do. So when you create your trading plan, you need to be disciplined enough to follow it. When you create your risk management plan, you need to be disciplined enough to not over leverage on your trades. When you think that, this opportunity I'm spotting in the market is potentially going to like hit TP, like you're 90% sure of it, you need to be disciplined enough to follow your plan that said that you're going to only risk 2% on this one trade instead of, freestyling or just like adding more positions and things like that, right? Next, we have consistency. Trading requires you to be consistent. Consistent, meaning that when you show up, first of all, you have to show up every single day to the charts, okay? Especially if you're in the learning phase of your journey, because you need this information to come into your mind. You need your mind to like sort of like marry the charts, right? So you need to be consistent with showing up every day, even if it's an hour of your time back testing, even if it's like a few minutes just to see what the charts are doing, you need to be consistent, right? You need to have a routine. You need to have a routine that at 7 a.m., I'm seated on my desk looking for opportunities. And then you need to have a routine where you look for, a certain type of opportunity in a certain type of market as well. So these are the things that make a trader successful. It's not even about the charts, right? So that's why I said it's 70% psychology. Next, we have resilient. Look, when the market is acting funny, when it seems like you're in a losing streak and stuff like that, you need to be resilient. You need to be unshakable. You need to be unshakable in this market. That's why your mind needs to like be focused on the greater things and not what the market did this week or yesterday or whatever. You need to think of the future, right? Then we have tenacity. You need to be tenacious. So this is a field that requires your time. Okay, so if you're coming into this field and you're expecting to make a boatload of money in like 60 days, then like don't bother. Just like go and get a job somewhere else. Because you need to be tenacious. You need to be disciplined. You need to be tenacious. You need to be patient. You need to be patient as much as possible. But you need to really, really stay in this field in order to be successful, right? Okay, so that's the mindset of a successful trader. Now, let's talk about some negativities in this field. First of all, I'm pretty sure every single person here has come across something negative regarding Forex or day trading or even crypto. I'm very, very sure of that. The one I hear a lot on Instagram is 95% of traders fail, 99% of traders fail, 90 whatever percent of traders fail. I have a problem with this particular thing because whenever people say this, they don't go into the nitty-gritty of what exactly that means. And we're going to go into that right now, right? Because if you think about every single industry, not everyone is going to be successful, right? In every single industry, let's say real estate, for example, I found some stats on realtors that actually made money last year in Canada. And I think it was only less than 20% of realtors that actually make money. But in their industry, they don't like carry the information on their head that 97% of realtors fail. But for some reason, in the Forex space or day trading space, everyone is carrying this information on their head. Why? Because of the fear of the unknown. It's so, this is the one thing that pisses me off in this field, because this field has a boatload of opportunities. In this field, you don't need customers. You don't need to open up a website. You don't need to have products or services to sell. You just need proper information, time, mentorship, and all of that. You don't need any of those things, right? But then they try to carry up these statistics so that people will be scared and don't get into it. I feel like it's all a scheme, but there's a lot of money in this field and you should take advantage of it. So let's look into this trader statistics. So people say 99 or 95% of traders fail. So what does that mean? So let's look at it. First of all, okay, we have a nice diagram over here. At the very bottom, we see here, potential traders start with the get rich quick dream. Yeah, potential traders, the word potential here, used here is very, I use that on purpose because everyone is a potential trader. The question is, are you really going to be a trader, right? So potential traders, they start off with the get rich quick dream. So you want to get rich quick, you want to, have a lot of money very quickly. You're expecting that in the next 30 days, you're going to like be a millionaire. Sorry to burst your bubble, but that's not going to happen. People have beginner's luck, quite all right. So beginner's luck, meaning they fund an account, they make some money by just doing some rubbish, but that's very dangerous because whenever you have beginner's luck, you think you know how to trade, but then the market will humble you. Then you go and start learning and all of that, right? So first of all, let's say we have 100% of people, they start with a get rich quick dream. Then moving on our triangle, we have 40% of those 100% people are the only ones, 40% of them only trade for 1 month. So that means that 60% are the only ones that's left, right? Then moving on, 80% quits within the first 2 years. And this is so real because at the time when I started trading, I had like hundreds of people in my group chat, but I can only count on one hand how many people are still trading today. I mean, that's quite all right if you think trading is not for you. But this is what I'm talking about whenever they say 99% of traders fail and all of that. If people are quitting, that means that that's the only way to fail is by quitting. But if you stay with it, then you will figure it out eventually. It doesn't matter how long it takes, right? Then we have the 7% that stayed past 5 years. Right now, I'm in my 4th year of trading, and look, my daughter, my daughter will learn this skill. I'm telling you, I'm already teaching her some things. She will learn this skill. My children will learn this skill. My husband has already learned the skill and all of that, right? So you have to stay with the skill. I'm telling you, that's the way to go. Because if you think, I'm just going to trade, I'm going to give it like maybe 6 months and see what happens. If I don't make money, I'll just quit. Bro, just don't bother. Save your 6 months to yourself, right? But according to the stats we have here, 7% are the only ones that stay past 5 years, right? And then we have the 1% that become consistently profitable. That 1%, now if you look at it on a broader scale, it's not like the 100% of the people stayed with it and did not become consistent. They quit, right? 99% of traders quit. That's not, the statistics should change to quit and not fail. That's my point right here. So that statistics should never ever scare you, because if you are a strong-willed person, you will succeed in this field. I'll just say that again. If you are a strong-willed person, you will succeed in this field. You can quote me anywhere, right? But yeah, this is my point. Whenever you see that statistics, please remember what I'm saying right now, right here. It is not 99% of traders fail, whatever. It's 99% of traders quit. Because you don't fail unless you quit, right? If you're in it and maybe you're having some difficulties, that just means that you're learning. If you're losing money, that means you are learning. The L means learning. Please hear me. The L means learning, okay? I wish somebody had told me this when I started. But don't take it personally. It just means that you probably need some more education. You need some refining in some aspects of your trading. That's all you need, right? So please hear me clearly. There is a lot of opportunity in this market. In the Forex market, we have, I believe, it's $6.3 trillion being traded every single day. There is too much opportunity in this market for you to decide that you're just going to quit or it's not for you, blah, blah, blah. No. No, you have to learn this, okay? In my house every single day, I will tell you this for free. In my house every single day, we are trading. My husband and I, our daughter, we are in the office trading every single day. Okay, my children will learn the skill. I'm teaching my siblings. Everyone needs to learn the skill. It's just good for you to have the skill so that you can have something good to fall back on, right? Okay, so let's move on. Okay, what do we have next? So why exactly is it that traders fail, quote unquote? We have a few reasons here. So lack of knowledge. Lack of knowledge will obviously lead to failure, right? So traders fail because they go on YouTube and watch 2 videos, fund an account and trade. Yeah, that's not the way to go, okay? Next is wrong or incomplete information. You're buying random courses from people that you have not vetted. So they give you wrong or incomplete information. Then no edge. So edge, we'll talk about this in another of our masterclass, but edge is very, very important. So edge is basically relating to your method of trading. It's talking about the technical analysis aspect of it, right? So no edge, meaning that you have not properly back tested, forward tested your strategy, right? Then no mentorship. So mentorship is completely different from purchasing courses. Mentorship means that you have someone that is actually guiding you through every phase of your journey. So mentorship is different from having a course. And then lack of patience, quitting too early, which basically highlights my previous point. I'll just talk about this very quickly. Mentorship. So for me, I'll use myself as an example. I have purchased I've spent thousands and thousands of dollars on purchasing trading courses. And you want to know what's interesting? the information that was taught on all of the courses is exactly the same. Let me just tell you now. If you think there is one holy grail 100% trading strategy out there, let me just inform you that it does not exist, okay? The trading is just, it's the same thing. You find the trend and follow it. But mentorship, true mentorship is not easy to find. Like someone that would actually take out their time to teach you. I wish I personally had that, because a few months ago, I had the opportunity to properly mentor a close associate of mine. And in that mentorship that I gave, I mentored this individual for a few months. I think it was about 3 months. And this mentorship was basically me teaching every single day, right? So in the live market scenario, I was basically like, do this, don't do this, teaching like each candlestick. What exactly does this candlestick mean? Are you going to enter because of this? Things like that. True mentorship is, I haven't found any. I've probably found 1 or 2 true mentorships, but courses are all over the place. And I'll tell you this, the styles of trading would only include smart money concepts, ICT, I believe, whatever the name is, ICT. I see this a lot on Instagram. Then we have price action traders, supply and demand, support and resistance, following trends, Fibonacci's, and a few indicators. That is all there is to the charts, right? And that's all that is being taught on everyone's course. But people still aren't profitable. Why? Because true mentorship is not there. There is a complete difference between me giving you a book to read and me teaching you what the book is saying. If I tell you one sentence, if I tell you to just read one sentence, you'll probably read, this fan is red. If I educate you to tell you what a fan is, why a fan exists, what the color of red means, do you get what I'm saying? That is what we actually need in this field, true mentorship. And I mean, it's completely understandable because it's very, very time consuming on the mentor's point of view, right? It's going to be very time consuming. But I'm just trying to let you know that mentorship is very, very important and it's completely different from purchasing courses. So let's move on. So let's just do a quick recap, okay? Let's do a quick recap. I really, really want you guys to get this because there's a lot of people on this call that you've probably heard about trading and you just know the negative aspects of it. So let me just state my point very clearly. Number 1, this field is very, very lucrative if you know what you're doing. Number 2, in order for you to know what you're doing, you need proper mentorship and guidance. Then you also need to be patient and you need to stay in the field. Even if you're in your losing phase, you just need to show up every single day. Just look at what the market is doing. Just analyze and just look at it. You don't need to place a trade, right? Even if it's a paper trade you're placing, that's completely fine, right? Now, the point is you need to stay in this field. And look, the way things are going with, all over the place, you hear people say, invest in real estate, invest in this and all of that. That's the topic for another day. But this field is just too lucrative for you to pass it on. You need to get educated on this skill set as much as possible. You need to stay with it and just stay with it, okay? Whenever you hear anything negative about Forex, about day trading, you need to remember that it is all noise. Just tell yourself these people are making noise and close whatever it is or scroll past it, because there's just too much opportunity for you to pass on because there's some negative news around it, right? Yeah, so moving on. Benefits of day trading. Benefits of day trading. Number 1, there is no income cap. There is no cap to the amount of money you can make in this space. There is no cap to the amount of money that you can make in this space, right? Then we have financial freedom. Financial freedom is, it's amazing, but there is no cap to the amount of money you can make in this field. Then we have financial freedom, time freedom as well. flexibility, lifelong skill set, right? So there is no cap to the amount of money you can make, meaning remember that we're looking for small fluctuations in the price of something, and then we're just taking full advantage of it. And then we have financial freedom. You're able to make money from anywhere in the world if you have your smart device and your skill set, right? That's the flexibility. And then lifelong skill set. The chart is going to stay the same. Like tomorrow, they're not going to like change the way the markets move. Is still going to be uptrend or downtrend and all of that, right? So it's a lifelong skill set, a skill set that can be transferred to your kids, transferred to your family. Like I said earlier, my husband is now trading. I'm teaching my daughter as well. So moving on, let's see. So now let's go to the charts. Let's look at the charts. Before we go to the charts, do we have any questions so far? Do we have any questions? Yeah, so basically, quick recap again of what we've discussed. So I've talked about what exactly day trading is, what Forex is. We trade multiple things. You know, trading is not the same as investing. We're looking for small fluctuations in price, and you need proper education and mentorship to actually succeed in this field. So I'm going to share my chart, my trading view chart. So let me bring it over. Okay. Can you guys see my trading view chart? Please let me know in the chat if you can see my trading view chart. Okay. Okay, that's good. Okay, so now let's look at the charts, right? So remember, trading is 10% analysis. So it could be your fundamentals, technicals, and all of that. Then we have the account management aspect of trading. So that's where your risk management comes into play, your trading plan, your risk management plan, your account management, and all of that. Then we have the psychology aspects of trading, which takes the whole cake. You need to have a cool, calm, clear mind at all times in the markets. Okay, so on my screen here, we have GBP JPY, which is the British pound versus the yen, right? So we're going to keep this very simple. For me, I like to keep my method of trading very simple. A lot of people on my social media platforms, they ask me my method of trading. My method of trading is just price action. I just look at the charts, I draw a few lines, exit, enter and exit. I use a lot of candlestick analysis. But my method of trading is very simple. Anyone can learn it in a day, right? So this is GBP JPY. And of course, everyone uses top-down analysis. If you don't use top-down analysis, then that's interesting. But this is GBP JPY, and top-down analysis, basically you start from the weekly time frame. And on weekly time frame, what you're basically identifying is the trend of the market. So with trading, we have uptrend and downtrend. So uptrend means that the price is going up. Downtrend means that the price is going down. Now, with uptrend and downtrend, whenever the market is moving, the market moves. It doesn't just like fly up like this, right? The market moves in waves. So for uptrend, we have a high, a low, a high, a low, a high, and a low. So you see these fluctuations. This is what we're trying to identify to see when price will potentially continue going up, the best time to enter and exit a trade, right? So these are this is called higher highs and higher lows. So here we have a high and then we have a low. Then we have another high up here. It's higher than the previous high. So that's why it's called a higher high. Then we have a higher low. which basically means that this is a low that formed, but it's higher than the previous low. So that's why it's called a higher low, right? So because of time, I'm not going to like go into like every single thing, but I'm just going to do a quick brush up. Once we're done with the masterclass, I will be sending out some free resources that you can take advantage of, and also the recording of this would be sent as well to your emails, and also on our YouTube channel, and you should subscribe, by the way. Okay, so moving on. Basically, when you're looking at markets, you're looking to identify where the market is moving on the weekly time frame, right? So on the weekly time frame, we can basically see that price is going up, right? Price is just going higher and higher and higher. So we are currently in an uptrend. Then, in addition to that, so with a top-down analysis, what you're doing is you're looking from the higher timeframes to the lower timeframes to identify potential opportunities, identify the trend, and identify levels of support and resistance, or supply and demand. So over here, we have a previous, we have an area of resistance potentially turn support for price to go up. So usually whenever you're going through your time frames, you identify the trend and then areas of previous support and resistance, supply and demand. So here we have the weekly time frame prices going up. We have identified our level of previous resistance. Then we go on to the daily time frame. So on daily time frame here, this is actually a trade I called on my Discord channel for GBP to continue going up. We can also see here that the price is going up as well, right? Daily time frame price is going up. So basically what we're doing is identifying areas where price could come back to retest and just continue buying, right? So that's why we have this our nice drawing over here. So this is basically how the market moves. You can see that over here. So we have price go up, down, up. Now, if you look at this diagram, the next thing for price to do is to potentially go down and then go up again, right? Or using our trading terms, what we usually say is impulse, correction, impulse, then we need another correction for an impulse. I hope that makes sense. So the question is, where exactly would price correct from and then impulse again from? That's the question, right? So very quickly, let's look at trends before we look into that aspect. So again, we have uptrends and downtrends, and then we also have sideways movements. So here we have an uptrend, which means higher highs, higher lows. Then we have a downtrend, so price is going down this way. So it's basically just vice versa of what we are seeing over there. Let me move this so you guys can see it properly. By the way, I keep my trading very, very simple. On Instagram, you see people say this is a quote unquote retail trading and all of that, but that makes no sense. You just trade the trend, like it's never that deep to be honest. Yeah, so uptrend, downtrend, higher highs, higher lows. Now with the downtrend, price is going down. So we have lower highs and lower lows. So we have a low here and we have a high here, right? So then the next thing we have would be another low, which is lower than the previous low, hence the term lower low. Then we have lower high. So we have a high that formed because it went higher than this low here, and it's lower than the previous low. So this is a lower high. So I'm just going to go over this again, just for those that are fairly new to trading. I'm going to bring out my writing tool. Okay. Uptrend. Consists of higher highs and higher lows. Okay. The uptrend consists of higher highs, higher lows. Then we have a downtrend. Okay, downtrend consists of lower lows and lower highs. Okay. Okay, so uptrend, we have higher highs, higher lows. Downtrend, lower lows, lower highs, okay? So let me just label this, our diagram here to show you. So we have here a high and then we have a low here. I'm telling you guys, this is literally all you need for technicals. There's a lot of strategies out there, but I'm telling you, you have to keep it simple, okay? So now we have a higher high. If you can screenshot this, oh my goodness, where did it go? Okay, let's do it again. We have a higher high. Then we have a higher low. Higher low. So I'm just going to use the abbreviation, okay? HL. HL for uptrends. Here we have a higher high, HH, and then we have a higher low, HL. Okay, so that's it for an uptrend, right? So we keep it simple over here at Chart Nation. Chart Nation is all about simplicity. We keep it simple so people would be able to learn and replicate every single day, because you don't need a new strategy every day. You don't need, even if you're in a losing streak, that does not mean your strategy isn't working, right? But then next we have, let's look at the downtrend. We have a high and a low. Then we have a low. Okay. Then after the impulse, then we have a correction. So the impulse will then create a low that is lower than the previous low. So that would make it a lower low. Lower low. And lower high. Okay. Okay. Lower low. Okay, so that's basically it with trading, honestly. You just need to identify a trend. If a trend has not already been established, there is no need for you to be the first person creating a trend. Let me just inform you. You need to find a trend that has already been established, identify where price could potentially react off of, enter your trade, take your money and be going. That's it. We keep it simple. There's a lot of strategies over there, like all over the place, right? But price action, follow the trend of the market, candlestick analysis, and that's really all you need. You rise and repeat every single day, okay? So now, we have here, we've already established what an uptrend looks like, what a downtrend looks like. So I'll just say that again. When the market is moving, it doesn't just like fly up or fly down. Because of how prices move and fluctuations, it will go up, go down, go up, go down, and all of that. So what you're doing is just identifying like when it goes up, when it goes down, to see when the next impulse or correction would be, and take advantage of that opportunity. So the next question would be, how exactly do you take advantage of the opportunity? Simple: support and resistance, supply and demand, right? But I'll leave that particular topic for next time because we have another topic to discuss right now. So let's look at a live chart. So this is GBP JPY. So we have here impulse, like we just said, then we have correction and impulse, okay? So the next thing we should be looking for is correction and another impulse again. So because we trade only with the trend, personally, I do not counter trend trade. The price is going up. I'm just going to be going up with it. I'm not trying to sell anything. So we have prices going up right now. Then we need to identify where is the next place price could potentially come down to before it starts going up again. So by doing that, you're able to identify, you're doing two things. Number one, you're following the trend, which is basically all trading is about, following the trend. And then with your candlestick analysis, you're able to identify when it's time to continue buying up again, right? So for example, if I was going to trade this pair, this is GBP-JPY. Let me just do this. Okay, so this is GBP-JPY. Let's clean up a bit. If I was going to trade this pair, I'll be looking for price to retest from two places. So number one, we have this level of minor resistance here. So price basically went up, rejected it before buying up again. So price could potentially come down here to retest and continue buying up, right? Or we can look for our supply and demand levels. So that's basically all you do, right? So you identify a trend, identify your higher highs, higher lows, identify where the next potential impulse could start from, and you trade off of that impulse, right? So with your top-down analysis, you're looking for the trend of the market, levels of support and resistance on all of your timeframes, and you stop on the 4-hour time frame, okay? So let's look at the 4-hour time frame. So on the 4-hour time frame, we see that price is still bullish, or still going up, right? So the next thing we should ask ourselves is, okay, we're going up. Where are we going to come down to before we continue going up again? Because you can't just like buy here. You can, I mean, you can do whatever you like, but you need to identify the best place for price to come down to retest off of before it continues to buy up again, right? So we found this level off of the daily time frame. We found this level off of daily time frame. Usually what I would do is just set my alert here and just wait for price to come to me, and then I take a trade, right? So just a quick recap of our charts session. So what we did was we did breakdown of top-down analysis. So what you're doing is you start on a weekly time frame. You identify the trend of the market. Is market going up or down? Then you basically identify your levels of support and resistance. Then you go to the daily time frame, do the same thing, go on the 4-hour time frame and do the exact same thing. If price is at your level or area of interest, the next thing to do is identify the price action, meaning the candles that are forming in that area. If it's going in the direction you wanted it to go, then you take a trade and that's it, right? So again, this is not the only masterclass we're having, right? In our next masterclass, we'll do more chart-intensive work. So this is just like a brief intro, just to show you how simple trading is supposed to be. So now let's go back to our slide. You have a question in the chat saying, what if price breaks through the level of support when it gets to that area? Then you find the next area. So we'll go through that next time, but if price breaks through your level of support, then the trade is basically invalid, right? You wait for two things. Number one, is price trying to, is the trend of the market trying to change? If it's not trying to change, then you look for the next area of interest. Price action is mainly technical analysis. Do you factor in fundamentals when analyzing? That's a good question. Personally, I only trade, I mostly trade indices, right? So I mostly trade US 30, NAS, and all of that. So my trading is mostly technicals. Let me just be honest. It's mostly technicals. I use fundamentals just like once in a while. I actually have a trading playbook where I have a list of my setups. I have a few types of setups that I take when there's like some sort of news and things like that, right? But personally, my trading is mostly price action. Yes, so moving on. Understanding risk management. Oh my goodness. Risk management can never ever be overemphasized, I will tell you, because the market, again, it's even if you have your analysis, your setups and all of that, you really don't know what the market is going to do, right? Because you don't know what the market is going to do, you cannot decide to like risk all the money you have on one trade. That is not even logical. That like doesn't make any sense, right? So you need to understand risk management. So let's move on. So risk management pillars. Some things to note when understanding risk management. Number one, losses are learning opportunities. Never take a loss personally, okay? I know that sometimes when you have a loss, it could hurt your ego, but that's okay. Taking losses is normal in the market, right? Losses are learning opportunities. You need to understand your risk tolerance. That's the next thing. So everyone is different. So that's why actually had a comment, I think yesterday on my one of my platforms. Someone was like, why is it that when you take a signal, I personally don't like signals. I don't sell signals, and I'm not in support of signals, but when you take signals, some people make money and some people don't make money. There's a lot of reasons why, right? But some people don't understand their risk tolerance. So when you enter a trade, you may decide that, okay, because I think this trade is going to go up, let me just like increase the risk. But then you don't, because of your nature as a person, you don't like to take that much risk. So then you start to close out of positions when active and things like that. So you need to understand your risk tolerance. Next, you need to be good at losing. Oh my goodness. Your trading will change when you embrace the concept of losing. Let me just say that again. Your trading will change when you embrace the concept of taking losses. You have to take losses in the market. There is no way to escape it. There is no holy grail trading strategy. There is no holy grail trading pair that you just like be winning every time. It's impossible. It's literally impossible to win all your trades. The only thing that's guaranteed in this market is that you're going to take a loss. The question is the loss going to be too much? Is the loss going to be like moderate and things like that, right? So you need to be good at losing as much as possible. So what that means is, and we'll talk about this soon, but you need to have a playbook. You need to have a playbook, and in your playbook, you need to have a list of strategies that you trade. So it could be break and retest, it could be supply and demand, whatever. Now, all of those strategies, you need to back test those strategies on multiple pairs from different market conditions. That's a lot of work. I don't think people know how to backtest. Backtesting is a lot of work because you need to collect a lot of data on your strategy. Okay. When you collect a lot of data on your strategy, then you'll be able to understand that, okay, this particular strategy, when the market is in this particular condition, I win more. Or I understand that this strategy wins only 70% of the time. So that means if you understand that it wins 70% of the time, that means you're going to be losing 30% of the time, right? So when you're in a live market scenario and you take a loss on that strategy, you remember that, okay, in my back testing, in my studying, this strategy won only 70% of the time. So we're probably right now in a 30% aspect of the strategy, right? So you need to be good at losing, and more information provided on that, but it's a lot of information, but let's see what we can do. Moving on, accept that you cannot win all your trades. Look, these days, whenever I am in a trade, I literally just enter my position, set my SL, set my target, and I just like go do something else. I don't care what the market does. Honestly, I personally just don't care. What I'm doing is just executing my plan every single day. I'm just executing my plan. And eventually, you consistently executing your plan, meaning your trading plan, your playbook plan, your risk management plan as well. Eventually, that would equate to the bags of money you need. Okay, it will equate to the bags of money you need. But if you're so focused on this one trade that made you that you took an L on, then you're not going to see the longevity of that strategy, right? So yeah, these are the key things to note with your risk management. Losses are learning opportunities. You need to understand your personal risk tolerance. My husband and I are traders, but his risk tolerance is different from mine. I'm more conservative. He's quite on the aggressive side and all of that. And that's okay. Yeah. So what you need to do is create your risk management plan in accordance to your own risk tolerance. Okay. Next, we have be good at losing. So be good at losing, meaning your strategy that you're trading, you need to be a master in that strategy. So even if the market is like acting funny and you took a loss on it, you already know. You just already know that, okay, this is a perfectly good strategy. It doesn't work 100% of the time, and that's completely fine, right? So moving on, let's talk more on risk management pillars. So when you're creating your risk management plan, you should have a risk management plan, by the way. You can't like freestyle in your trading, okay? So you need to have your risk to reward ratio in your risk management plan. So that's why you need to back test your method of trading. So in your method, when you're back testing, you have to be able to identify that, okay, within this space of time, this strategy averages, a 1 to 2 risk to reward. And that's a very, very important factor for you, right? So you need to understand, okay, this strategy averages a 1 to 2 risk to reward. So whenever you're in a trade, you know that, okay, me aiming for 1 to 5 on this strategy does not make any atom of sense, right? It's not realistic based on the data I have collected on this strategy. That's why I see a lot of people don't know how to backtest. When you're backtesting, you need to have I'll probably share this for free, but you need to have like an Excel sheet or like a sheet where you basically put your pair, the time. There's like a lot of information for you to collect, but that is very, very crucial when you're in a live market scenario, right? Okay, so moving on to the next pillar in your risk management, we have entry and exit. So meaning your stop loss and take profit. People that trade without stop losses, I don't know, like, why do you do that? You have to have an area where you're going to enter and exit the market. So exiting meaning your stop loss or your TP or target. So your stop loss is protecting your account. Stop loss is not a bad thing. You hitting stop loss means that you are cutting your losses short, right? So that's the purpose of a stop loss. Then your target is also you taking your money away to avoid greed. Sometimes when the market is like moving, you see a lot of like momentum in your favor, and you're just like, let me just like move my target a bit. Let me just move it. Let's just see. And in that moment, it decides to completely revert and then goes down to your SL. Bro, that's bad. You need to always have a target and a stop loss at all times. Your target is based off of your risk to reward ratio that you have collected from your back testing, okay? So everything like merges together eventually. I hope you guys are taking notes, by the way. Okay, so now the next pillar in your risk management pillar is the percentage risk per day or per trade. Your job as a trader is to protect yourself, protect your accounts, and trade your strategy. The market is going to do whatever the market feels like doing. There's nothing wrong with your trading strategy. I personally believe that any trading strategy can work if executed properly, right? The question is, do you have a plan? Are you following that plan you have created? Have you tested that plan, right? For me personally, at the end of each year, I literally backtest the whole year for all the pairs I trade. It's a lot of work, but I can literally show you my sheet where I have all the pairs listed, all the trades I would have taken that year. I have them listed. I collected data on them, so I know how to basically take advantage of this new year that we are in. This is very, very important. That's why I say proper mentorship is hard to find, because people don't talk about this aspect, right? Where you have to put in the work, but the work is what will make you the money. So you need to have a percentage risk per day and per trade. That's very important. So next, the last thing we have on the pillar is the number of trades per day. So number of trades per day is also very important. Yeah, you should, again, all of this data that you're putting in your risk management plan should be stuff that is back tested. This is data you have collected from your back testing, from your understanding of the markets, from your mentorship. So this right here is not just you coming up with like random numbers that you think you would like. Maybe I'll just take like 5 trades in one day and I'll risk like 50% of my account per trade. Bro, you're just going to play yourself, okay? But yeah, this information right here, this is stuff that took me years to find. And again, I would say there's a lot of people that are not consistently profitable. You would find that it's something very, very little or minute that's preventing you from your money, that's keeping you from that money you should be making from the markets, right? But all of these things are very important. Consistency, risk management plan, this is part of the consistency that I mentioned earlier when I talked about the mindset of a trader. This is consistency. You show up every single day to the market to do the same thing. And eventually it does get boring. But when you see the money, it won't be boring, believe me. But it's consistency. You're doing the same thing. I risk 2% today. I'm taking only 2 trades today, and that's it. That's it. Even if those 2 trades are losses, you walk away and then you come back tomorrow, you risk your same 2%, you take only your same 2 trades, right? But yeah, I hope this information is clear. So what do we have next? I believe we have the Q&A. Okay, so now we have the Q&A session. I know this was very like quick, straight to the point and all of that. So I hope someone was able to take something home today. So now we're going to go into our Q&A session. Please type in the chat whatever question that you have, and I will answer it before we call it a day. So very quickly, I would like you guys to know that we are very, very active on social media. We are very, very active on social media. Chart Nation FX, that's our name. Chart Nation FX on Instagram, on YouTube, TikTok, it is Chart Nation _ Chart _ Nation FX. Then I am on LinkedIn, Oreba Ogene Omotusha is my name on LinkedIn. So connect, I answer the DMs myself. So if you have any questions, if you have any inquiries, let me know. So you can follow us, and you should follow us on Instagram, subscribe to our YouTube channel, on TikTok as well, because we are very, very, very active. I post every single day on my platform, okay? And I post a lot of educational content. I'm not trying to like show you blinks or anything. I'm just trying to educate you. So follow us on social media. Okay, we have a lot of questions already. Okay. Oops. Okay, we have a lot of questions now, so I'm going to. Yeah, it's still the handles are all on the screen right here, so you can take advantage of that. Okay, so let's start from the beginning. How can we journal our trades? Okay, so how can we journal our trades? So that's a good question. Personally, I use 2 methods to journal my trade, okay? The first one is TradeZella. Shout out to TradeZella. They are absolutely amazing. TradeZella is a software where you can link all of your trading accounts to TradeZella. So all of the trades that you place would automatically go into TradeZella, and it would, like, there's a lot of features that would basically analyze all of your trades for you, show you your average risk to reward, your win rate, and all of that stuff. The second method I use is my pen and paper. I have a notebook that notebook has really helped me. I write down a lot of my thinking about trading, about my trades and things like that, so I can go back and review every single weekend, okay? I go back and review my notebook every single weekend. I write down my feelings sometimes, and things like that. So that's how you journal your trades. Then how can we be part of a mentorship? Okay. I've gotten this question like all over the place. How can we be part of a mentorship? I have a mentorship coming up. Okay. It is exclusive. It's very, very exclusive for just a handful of people because again, I'm not in this industry to try to sell you any course because look, I went through pain to get to where I am today. And I just want to make someone else's journey a bit easier, right? Because the pain I went through, not everyone could have survived it, I'll tell you. But the mentorship I'll be creating, more details will be provided in a few months, but for now, please take full advantage of these masterclasses because I'm dropping rare gems right here. I'm dropping gems, so please take full advantage of the masterclasses. However, we will be sending you details about a mentorship after the call. So if you are interested, you can join the wait list. I have a wait list of the mentorship, and then eventually we'll put something together for you guys. How can we get the recording? So subscribe to our YouTube channel. The recording would be provided. Do you have a Discord group? Yes, I have a Discord. And I have a Telegram. The links are in the bio of my Instagram page. Now, I will just tell you guys this. There is someone impersonating me on Discord. And I'm trying to, I think I would leave that platform eventually, but someone is impersonating me and selling bots. Personally, my trading is manual. I know nothing about bots. So if anyone reaches out to you, like, I will never contact you first. Okay, please be smart. If anyone reaches out to you, I'm not the one, okay? But the links to my Discord and Telegram is in the bio of my Instagram. Instagram is ChartNationFX. Next question. Next question. What inspired you to start offering free masterclasses? Other people will have you pay for literally anything. I'm telling you, bro, what you just said right now, other people will have you pay for literally anything is why I decided to make this free, okay? A lot of time, resources, money was put into this masterclass to make the quality good. And, you know, a lot of resources was put into this. I decided to offer this for free because, again, the pain I went through is the inspiration. The pain I went through, the pain I went through is the inspiration for this free masterclass, okay? And in this masterclass, it's not created to sell you anything. I'm not interested in that because I have multiple sources of income anyway. So it's just to offer my deep knowledge about the markets to people that cannot afford the expensive courses and mentorships that they want to get, right? So, and I also, whenever people DM me about like real trading issues on Instagram, I literally provide real answers, right? So I'm just trying to give as much as possible because this industry is too much, honestly. Okay, so next question. I'm sure you didn't start off trading indices straight out. So when you was trading Forex pairs, do you incorporate fundamental analysis to your confirmation before taking your trades? For trades of, have you always been a technical trader? I have always been a technical trader. Let me just inform you. I've always, and I still trade currencies, okay? I trade in the indexes like US 30 and the rest every single day, but I still swing currencies from now and then. Like, I also trade gold as well. I don't use fundamentals to trade them. I just look for good trends, good opportunities in the market and take advantage of it. In my opinion, if you have technical analysis, you're good. It's like, they try to overcomplicate this thing. At the end of the day, even if you have fundamentals, you still need technicals to align. You still need technicals to align in order for you to take the trade. For example, if you have some fundamental news that the price of something is going to increase, you still need the price action to align in order for you to enter the trade. And 90% of the time, even without the fundamentals, as a technical trader, you can identify that price is changing trend. So it's time to start buying. Do you get what I'm saying? You don't need too much, bro. You don't need to. I'm telling you, you don't need much. Again, if you trade fundamentals with technicals, that's you. That's great. That's great. But if you're struggling with fundamentals, or if you're wondering about fundamentals, if you don't have that information, it's completely fine. You just need to be aware of red folders, right? Everyone knows forexfactory.com. You just need to be aware of red folders and trade cautiously. I'll give you an example. On Wednesday, NAS 100 shot to the sky, like after 4 p.m. And that was because there was a data release on a tech company, because NAS 100 is the stock average for tech companies, right? There was a data release for tech companies. Prior to that release, NAS 100 was in a strong downtrend. Now, when that data was released, price action changed to bullish. And if I did not know about that data, I would have been able to spot that trade from a technical point of view. I hope I'm making my point clear, but you don't need too much again. That's my point. God bless you, sister. Thank you. Thanks for the opportunity. My question is, how long do you trade until you find profitability? This question is very, very relative. Very, very, very relative, because people assimilate things at different rates. People get information from different sources as well, right? So it's completely relative. For me, like I said, I had a very painful journey. It took me 2 years to figure out what I was doing wrong. So it took me 2 years to become profitable, right? But it should not take you that long if you are getting the right information. I gave the case study of the friend that I had that I was coaching every single day. That person is withdrawing money from prop firms because of the type of education they got. Do you get what I'm saying? Your profitability completely depends on the kind of knowledge and your approach to the markets. So if you have good education, take full advantage of it. I hope that answers the question. Please, which broker and prop firm do you recommend? So for brokers, I would advise that you trade with a broker that is regulated in your country. Regulated in your country, right? Personally, I am in Canada. The broker that I use is Forex, Forex.com. Yeah. But regarding brokers, you can literally just Google regulated Forex brokers in whatever country you're located and check YouTube for reviews, right? Then you get into them. Prop firms, again, the prop firm, that depends on the country that you're located in. But personally, FTMO. FTMO is the only prop firm that I can talk about, because there's a lot of like regulation and lots of stuff going on around prop firms right now. But FTMO for people that are not in the US, okay? Moving on, what is your entry strategy? My entry strategy is simple: candlestick analysis. Candlestick analysis, simple. You see that line that you said to offer to people that cannot afford rectory using their own is enough for God to bless you beyond your imagination. Thank you so much. Thank you so much. What's the best time to trade during the day? Best time to trade is when your pair is in session, okay? Best time to trade is when whatever pair you're trading is in session. GBP, JPY that we just looked at, that is going to be London session and Asian session. If you're trading US 30, NAS 100, trade it during New York session, because you need liquidity and momentum to trade, right? You need liquidity and momentum to trade. So trade your pair when it is in session. Okay, have more questions. How much can you start trading? Who is still in school? Another one. Okay, so if if you want to start trading, don't think about how much you need to start trading with. You need to think about your strategy first. What approach are you going to use to attack the market? Because look, the market is variable. You have to be the constant, right? The market is variable. You have to be the constant. So meaning that the market does whatever it does. You cannot do whatever you want to do because then there's no balance there, right? So you need to focus on your method of trading. You need to focus on backtesting, understanding your strategy properly, test it on demos before you then look into funding an account. How do you choose what strategy is best for you? So number one, price action. So strategies that are around price, like candlestick analysis and trends, no indicators. Personally, I don't use indicators. I don't use EEs, bots or whatever is like trending now. No, you need to focus on the price action, follow the trend, literally what I just showed, follow the trend, understand candlestick analysis, and that's it. How do you set alerts on TradingView how do you set alerts on TradingView? So you just, if you're at the price that you want to set an alert on, then you right click and that's basically it. Let me check YouTube for questions on YouTube. Okay, we have a lot of questions here. How long did it take you to become profitable? Yeah, I just answered that one. My question is about leveraging and over-leveraging. On the leveraging and over-leveraging, how do you know if you are over-leveraging and under-leveraging? You need to create your risk management plan. Okay, you need to create your risk management plan. Depending on your account size, you set a percentage risk per trade per day. Where did you get to see the wait list? Where did we get to see the wait list? Okay, the wait list for the mentorship, the exclusive mentorship, the wait list would be sent to everyone's emails after this class. We're going to end soon, but that will be sent. And if you're interested, you can join the wait list and then more information will be provided subsequently. I was late. Will the recorded session be available? Yes, the recorded session will be available, posted on our YouTube channel. So subscribe, please, and thank you. Thank you for making it free. God bless you. Thank you. Yeah, so we're gonna call it a day here. I hope you guys were able to learn something. I really hope you guys were able to learn something from our session today. Because again, a lot of resources was put into this, and this is not going to be the last session, okay? This is not going to be the last session. We're going to have another one next month. The date and time would be shared eventually. So thank you guys so much for joining. I hope you learned something. I hope you learned something. I hope you learned something. So thanks so much for joining, and you will receive a thank you email with the recording, with the link to the mentorship, the wait list to the mentorship, okay? So have a wonderful weekend, everyone. Have a wonderful weekend.